So let's say you're thinking about starting a business, or you've already been running yours for, a number of years now. One of the most common forms of business is an LLC. Sure, everybody's heard of that, an LLC, right? Somebody gets a business, 9 times out of 10, what they do when they go file and make a legal business formation is they form an LLC. You may have also heard of another business structure type called an S-Corporation. Now, I've talked a little bit about S-Corporations, but typically when I do, I compare the S-Corporation to a C-Corporation. And quite honestly, the average person doesn't care about a C-Corporation. So, one thing they do care about though is the difference between an LLC and an S-Corporation. There are a lot of benefits that an S-Corp can provide that an LLC cannot, but there are also a lot of instances in which one should just stay as an LLC despite these extra benefits that could come from getting an S-Corp. S-Corporation, S-Corp. So let's just mainly talk about tax. We're not going to talk about any type of liability here. We're just going to talk about your tax bill for your business at the end of the year under an LLC versus an S-Corp. So an LLC, sole member LLC, if you are a part owner in an LLC, you actually are taxed as a partnership all of a sudden, instantly, unless you elect otherwise, which your only real other option out of that is to elect S-Corp status from partnership. But that partnership stuff is a whole different deal. Let's not even talk about that. But do just know that if you are a part owner in an LLC, that business is taxed as a partnership, and that has an entirely different set of rules, especially compared to just a single owner LLC. But let's just focus on the single owner right now, so we don't even have to talk about partnerships. So how is an LLC taxed? Well, a sole member LLC taxed. It is somewhat similar to that of an S-Corp, in the sense that the business profits of an LLC flow through to the owner individual tax return. The LLC, the business itself, does not pay any taxes, neither does the business itself in an S-Corp. The only time a business is subject to taxes on the business's income is if that business is a C corporation, like Amazon, Walmart, Apple, and so on. That's the only time the business will be subject to an income tax, is if you are a C corporation. So, an LLC income flows through to the individual owner, just like it does under an S-Corp. And this is, again, a way that an LLC and an S-Corp avoid double taxation like there is with a C-Corp. I have a previous video on that discussing C corporations and how they're double taxed. So please just look into that or comment and I can send me a message or something. Anyways, so let's say that your LLC has a taxable net income of $100,000 for the year. Right? So you got your LLC right here, you're the sole owner, taxable net income is $100,000 a year. So like I mentioned, the LLC does not pay a tax on this. What happens to this $100,000 is it will go over to the individual, and the individual will then be subject to individual tax rates on this income. Okay? Individual tax rates and rules. This is very similar to an S-Corp. Every year that the LLC has a profit, whether or not the owner takes the money out of this LLC, this will happen. That's the flow-through part of it. The income from the business flows through to the individual and then is taxed at the individual level. Now, the big thing about an LLC is that we're just going to figure that you're just pretty much running a standard business, like let's just say lawn care, because it's easy, right? But you're the owner-operator of your business, whatever that business is, okay? You're actively participating in your business. One thing an LLC sole owner is subject to is typically, this is not for rentals, This is for people who like run businesses, like I mentioned, lawn cares, could be power washing, construction, things of that nature. This is not for real estate. This is not for rental income. If you have an LLC that's a rental income, this thing I'm about to explain does not apply to you. And this is just really to drill home the comparison between an LLC and an S-Corp. If you do have rental income from rental properties that you own, I can try to bring that up in a different setting or whatever, or send me a message or something. Anyways, one thing that an active owner of an LLC is subject to when that $100,000 flows through to the individual level is something called self-employment tax, okay? So what's going to happen, the LLC is going to earn its taxable profit. This taxable profit is going to flow through to the individual. So this is going to be subject to ordinary income tax rates. So whatever tax bracket this would put you in, that will explain your ordinary tax rate. But there's this thing called self-employment tax. And sorry, I'm trying to write through a camera. My handwriting sucks anyways, but there's something called self-employment tax. A little better. And this is pretty much equal to 15.3% tax on your business's income. And what this 15.3% tax is made up of is your FICA taxes, okay, which breaks down into your Social Security taxes, which is about 6.2%. And then you've got your Medicare taxes, which comes out to 1.45%. And then, so you can see here, that's a total of 6.5%. Now, one thing to note here is this FICA tax that I just explained, this 6.2% and this 1.45%, is a tax that also comes out of if you're an employee. If you're an employee, you are also subject to that same 7.65% in FICA taxes, just like you are as a self-employed person. So in a sense, what's happening here is the government saying, okay, you're self-employed, we still need your payroll taxes, as if you were an employee. But here's the crappy part. So this tax is pretty normal. Everybody's used to this. But the reason why it's called a self-employment tax and the way that we get to this 15.3 is in case if you guys did not know, your employer also matches these taxes, okay? And because you are self-employed, you are now responsible for both those portions. And then when you do that, that's how you get to your 15.3%. And it's this part, the times 2, where you get the self-employment tax. So this LLC, sole member owner, this income flows through. He's going to pay ordinary taxes on this. On top of that, you are also going to be subject to a 15.3% self-employment tax, which is because of your payroll taxes, FICA taxes, Social Security, and Medicare. And then you have to also, because you are the employer, you have to pay the employer's portion of the FICA taxes as well. So that is one of the really crappy things about being an active participant in your sole owner LLC, is that you are subject to that self-employment tax. And instantly, because of this self-employment tax, under an LLC, all of a sudden, your marginal tax rate, okay, gets up to 25, 30, 35% really fast, all right? So let's talk about that. So this is how your marginal tax rate goes up very fast. And for anybody who doesn't know what a marginal tax rate is, it's your additional tax, it's your tax rate on $1 more earned, right? So let's say your income's at $100,000. What is the tax rate on one additional dollar? What's the tax rate on every other dollar on top of that? That's your marginal tax rate. So let's say, all right, so you got this $100,000 of income, and then all of a sudden, this $100,000 of income, ordinarily, after your standard deduction, you're going to pay a normal income tax rate of about 22%. Don't take this number to heart. Tax brackets are a thing. less the standard deduction. Look into that just to get some firm numbers on this, but I'm just using this as an example. So you're gonna have this as an ordinary tax rate. On top of that, you're probably gonna have a state tax rate after the standard deduction, just like this one. Michigan's is 4.25%. And then now you've got your self-employment taxes of 15.3%. All of these taxes you are paying under an LLC. 22 plus 4.25 plus 15.3. I mean, holy freaking crap, guys. In this scenario, you are at a 41% additional tax rate, mainly because of this self-employment tax rate here. All right? So now, on every, just to use that as an example and try to keep it simple, on every dollar you earn going forward, you are taxed at 41%. $100,000 in your business, $41,500 going to the government. For lack of a better example, it wouldn't be that exactly dollar for dollar, but it would be pretty close, and I just hope that you get the picture. Sole member LLC owners are subject to that self-employment tax. Why does that matter? Because the owner of an S-Corp is not subject to that same self-employment tax. Oh, are you serious? I just saved 15% on my taxes every year. If I go from an LLC to an S-Corp, are you kidding me? Why doesn't everybody just get a freaking S-Corp then? Here's why. There are a bit more rules that come into play for an S-Corp than there is for a single member LLC, okay, owner. One of the main rules of an S-Corp is that you have to pay yourself as the owner a reasonable salary out of your business on a W-2. So now, under an LLC, if you're the sole owner, you will not W-2 yourself. That is not how you pay yourself if you are the sole owner of an LLC. You do not give yourself a W-2. You do not issue yourself a 1099. Neither of those two things is what you do. Don't do it. Under an S-Corp, however, you're required to pay yourself an addition. You're required to pay yourself a reasonable salary. Now, what amount is a reasonable salary? That's up for debate. It's very debatable. Okay. You can try to do a little bit of your own little research on there, and there are some good articles out there. What I see a lot is that it's compared to the business's annual sales, as to how so you take a certain amount of sales, will then kind of determine what your reasonable salary is, okay? And then also another thing to think about when you're thinking about that reasonable salary is what would you have to pay somebody else to do what you're doing in that business? Okay, that also goes into the debate of the reasonable salary. So, that reasonable salary in an S-Corp is required to be paid to you, the owner, on a W-2 every single year. So that is one of the requirements of electing S-Corporation status. And yes, you as the owner of an LLC can elect to have your LLC taxed as an S-Corp, okay? But you'll be subject to those S-Corporation rules. So let's get into some bread and butter here as to S-Corp status and when how does an S, let's dive into S corps and let me just paint the beautiful picture of how an S corporation saves taxes compared to an LLC. An S corp's profits are not subject to self-employment taxes like a sole member LLC is, okay? So for instance, let's say that you have an S-Corp now, all right? You got an S-Corp. Let's say that your taxable net income before your salary is $150,000, okay? A little bit higher than what you had under the LLC, but that's just whatever. Taxable net income before your salary is 150K. Your salary, your reasonable compensation, is $60,000. Now, this $60,000 is deducted as an expense on your S corporation's tax return, which will then make the taxable net income of your S corp $90,000. And you paid $60,000 to yourself on a W-2. Now, obviously, you've gotten a W-2 before, right? This $60,000 is going to go over here. One thing to note that's special about this is this $60,000 that you received on the W-2 is just like any normal standard W-2. You guys remember when we were talking about the FICA taxes, okay? Your S-Corp is going to pay the employer portion of your FICA taxes, and then just like any other W-2 that an employer gives you, you are going to pay your share of the taxes. So, essentially, the money that you pay yourself from an S-Corp is still subject to this 15.3% tax, okay? On top of workers' comp insurance, on top of unemployment taxes. So this $60,000 cost the S-Corp a little bit more than $60,000. The $60,000 that you get on the W-2, like I mentioned before, is subject to all of these FICA taxes just like any normal W-2. You, the employee of the S-Corp, will pay this portion. The S-Corp will then pay the employer portion, coming out to that total percentage right there. So, on this $60,000, you're still paying that annoying self-employment tax pretty much, just in a different way. But what's really beautiful about the S-Corp is when this happens. Okay, so on this 60, it's costing you, you're still paying that self-employment tax, and there's no help there. There's no tax savings on the income that you salary yourself from your S-Corp. But, check this out. You had 150K, and then you paid yourself $60,000. Then your taxable net income for the S-Corp goes down to 90. Now, up here, when you had a taxable net income from your sole member LLC of 100, this flowed through over here, and then this $100,000 of the business profit, right, is subject to that self-employment tax. Now, this $90,000, once it flows over here, once this $90,000 flows over here, this $90,000 is not subject to that self-employment tax of 15.3% like it would be in an LLC. So instantly, if you take that $90,000 and you do switching to an S-Corp status, in this situation, just saved you $13,770 in taxes. $13,000 you just saved in taxes by flipping your LLC or to an S-Corp, okay? That right there is the beautiful thing about electing S-Corporation status. And as I might have mentioned before, why doesn't everybody just run and go do S-Corps? Because there's a lot of requirements for them, okay? Like I said, you have to pay yourself a salary out of that S-Corp. And it has to be a reasonable compensation, which is greatly up for debate. So we won't get into any of that. But you have to be able to consistently pay yourself a salary out of that business. When you're just starting up your business or in the first few years of your business, your sales and your net income are going like this. You can't necessarily pay yourself that salary every single year to be able to keep that S-Corp status. So that, I would have to say, is probably one of the biggest reasons as to why people don't just go run and go get an S-Corp, right? Also, another reason people don't get S-Corps is because now your tax return fee is going to go up. Now you're looking at least like a $650 tax return versus where if you just had a standard LLC, it would be, it could be like $350 instead of like $650 just for this S-Corp's tax return. So your fees go up. Obviously, you're going to have to keep a serious track of your books and records once you get an S-Corp. Obviously, you're supposed to do that stuff under an LLC too. But in terms of filing taxes with an LLC and keeping accurate books and records, a sole member LLC, typically for tax purposes, you're not looking at the balance sheet. You're only looking at the income statement under a sole member LLC. It's typically all that matters. Yeah, obviously you're going to have fixed assets that depreciate and all that stuff, but an S-Corp, for certain S-Corps with certain requirements, you're going to want to, there's a page on there where you're filling out your balance sheet, so your assets and your liabilities, and then your equity accounts too. So there just becomes a lot more minutia. There's a lot more requirements of an S-Corp. So that's why a lot of people don't just run and go get an S-Corp. Also, people don't just go run and get an S-Corp because if this situation that I just explained isn't the case, an S-Corp might not be worth it for you, okay? So for instance, let's just say that your business's taxable profit is only $50,000, okay? Before you pay yourself a salary. So under the LLC, that $50,000 is going to flow through just like it would in an S-Corp, except that flow through that $50,000 is going to be subject to self-employment tax, that 15.3% that we don't like, right? So you would still be subject to that, but let's just say that if you had an S-Corp in that same situation, before your salary is $50,000, and then let's say your reasonable salary is $50,000. So then you have 50 minus the 50, you have zero business profit, okay? And then on that $50,000, you would still be paying basically those self-employment taxes plus workers' comp insurance plus unemployment insurance. So that $50,000 would actually cost you more under the S-Corp than it would in LLC in that situation. When is it time to switch from and maybe elect S status? When you can have that tax savings. When your business is able to have a taxable profit after the owner's salary, your salary, to where that after salary taxable business profit avoids that 15.3%, and then that tax savings right there is worth all of the extra stuff that you have to do with an S-Corp. If there's no business profit left over after the owner takes a salary, there is not much point of an S-Corp because then you're just creating more work, you're actually spending more money, because like I said, workers' comp insurance, unemployment insurance, and all that stuff, to save nothing in taxes, because when that stuff flows through, okay, you would be saving the self-employment taxes on that flow through, but if it's zero, there's nothing to flow through, so then there's no tax savings. Do you follow that? So in that situation, if your income isn't high enough after you pay yourself out of your business, an S corporation wouldn't make sense. You would just be creating more work for yourself that, like I said, isn't worth it. So that's a pretty deep dive into S-Corps and LLCs. I hope you like it. Feel free to message me with any questions. Follow me on LinkedIn, Instagram, TikTok, and Snapchat, all that good stuff. I think I covered them all. Yeah, follow me on all that. It's pretty much just my name on there. It's either T_Hearn or it's at Tyler Hearn, something like that, and you can find me.